targeting 62,000 for Bitcoin by the end of March. I think there's a good chance we're making our lows for the first half, like this week. Bitcoin is down, but it's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January. So we're actually on our way to 62, but that's not a bearish development. It's just a retracement. To me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence, but the investors view this as a crisis when it's really a growth scare. Is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
As Bitcoin's price continues to decline, the crypto market sell-off is intensifying as we approach the first week of March. Tom Lee has an urgent update for those selling Bitcoin and shares his prediction for what's to come in the next month. Historically, tracking Bitcoin's price in the year following the halving and in the wake of multiple all-time highs, financial analyst and Bitcoin bull Tom Lee outlines his forecast for Bitcoin investors. He believes that $400 trillion is poised to flow into Bitcoin. Currently, Bitcoin's price is just above $85,500, down over 6% in the past week. Lee predicts that Bitcoin is about to make history, and in the coming months, we could witness one of its biggest price surges yet. The story will only grow in significance in 2025 with the rise of Bitcoin ETFs, as thousands of institutional investors across the United States now buy Bitcoin. This surge in demand for the leading digital asset has created an unprecedented supply-demand imbalance for Bitcoin, and according to Tom Lee, everything is about to change. Have you ever wondered who the crypto advisor must be for the biggest names in the online business space, such as Iman Gadzhi, Andrew Tate, and Luke Belmar? Well, there's one crypto investor who was the consultant for all of them, and he actually shares the systems he gave these influencers to make them millions on his YouTube channel for free, growing an 8 million portfolio by the age of 25. Daniel McAvoy is one of the best crypto investors you'll find online, specializing in long-term investments and meme coin investing. His YouTube channel is packed with incredibly valuable videos that will help you make life-changing wealth from crypto. Start watching one of the greats today, link in the description of this video.
If we think back over the last year, in Bitcoin in particular, right, we had the approval of the ETFs, we had a big ramp in those things, then we saw it go sideways for, I want to say 7-8 months until the election, and then it goes from basically 65,000 up to 105,000, and now it's back here. It broke below that 90,000 level, and maybe it's like 84,000 or something like that. Give us your 411 on Bitcoin right now.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but, Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence, but is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now. I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning, but investors don't want to become too bearish because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and that's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And on the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy.
Do you think we're going to get a 10% pullback in the S&P this year? Because we did have one July highs to the August lows, and things kind of accelerated into that August low, and it felt a little panicky. And again, since then, we haven't had too much panic. I think that move in December after the Fed meeting, that felt really bad. But we were not making, it didn't take long to make new highs.
Well, I think that July to August was like essentially, I would say Fed driven.
Yeah.
And so that makes sense because it felt like either the Fed made a policy error or the Fed turned hawkish. Right. But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think this is just a flesh wound right now. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in. That's why I don't think
But it probably takes longer than expected because I think we keep throwing these threats out, but we don't actually put any requests for concessions out, right? There really aren't that many right now. I mean, it just seems like it's a bit of a tit for tat. And I think the other side is just kind of sitting there and they're taking the volleys right now because they don't really know what they want.
I'm not an administrator, so I don't know what kind of back channel talk there is. I'm sure there is.
With unwavering enthusiasm for the Bitcoin space, Tom Lee confidently predicts that explosive growth is just around the corner. BlackRock and other major crypto players are already positioning themselves for this surge. Lee reassures investors that a long-awaited rise is on the way, and by the end of 2025, there will be 1.1 billion active crypto wallet. The growth rate is staggering, and it will mark the fastest accumulation of wealth the world has ever seen. After a career's worth of research, every chart and piece of data points to the same conclusion. Liquidity drives everything, and crypto will emerge as the top-performing asset.
The reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? I mean, that's a fact. Because, if you put a 300% tariff or something, we don't really know how to titrate that number. And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House and I know that I have some opposing risk from the Fed today, because the Fed's hawkishly paused, well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral. And but then everyone's playing a dangerous game because, as you know, you don't want to get stall speed in the economy, because the day the economy gets to stall speed, we open up the uncertainty of a recession, because a shallow recession. A recession is unknown once it starts. I'm going to say I think the Feds, in terms of guessing their thinking, I think they view tariffs as an inflation risk, and that's governing their actions. But it's evident now that tariff risk is actually deflationary, because it's sapping consumer confidence, and consumers don't actually have wallet share to pay for higher prices. So it's going to create a demand decline, which is recessionary. So I would guess that the Fed's thinking around this is going to evolve this year, that tariffs are probably deflationary, and therefore the Fed doesn't have to be hawkishly paused. And I'm not a Fed watcher, but we do watch what the markets are pricing. The market's only pricing a 27% probability of a cut in May. And by the way, the bond market's also, if you look at distribution, pricing a 23% chance of a Fed hike. So there's still a very large cohort that is quite hawkish in the bond world. I would guess that as this tariff stuff causes confidence to fall down and Doge, etc., that 23% chance of a hike goes to zero. But I also think the odds of a May cut should be higher than 27%. The market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner.
Tom Lee challenges traditional economic metrics, arguing that they are often manipulated to serve a specific agenda, such as labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and the media reflects its growing recognition as a valuable asset. However, Lee emphasizes that this is just the beginning. Comparing Bitcoin's early years to the current widespread interest and investment, particularly with the rise of Bitcoin ETFs, Lee sees this as a major shift in the financial landscape. In contrast to conventional economic manipulations, Bitcoin emerges as an alternative, detached from traditional economic controls. Lee also notes that major corporations like Apple, Amazon, and Google, leveraging their long-established relationships, will quickly amass large amounts of Bitcoin via spot ETFs, bypassing the complex processes typically involved in acquiring the asset. This highlights the transformative potential of cryptocurrencies within traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies, as the rapidly changing economic environment presents a unique opportunity for investors. He urges them to take advantage of Bitcoin's potential for securing a more prosperous financial future. What are your thoughts on Tom Lee's latest interview, and how do you think Bitcoin's trajectory in the coming months will impact the broader crypto market and the world of investing? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.